Welcome everyone to Vested Interest. This is Shane back again for our weekly portfolio update. We do these every Sunday morning at 7:30 a.m. We did add $1,450 to the portfolio this week. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and a special thank you to those who have subscribed to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing, buying stocks in good companies that pay growing dividends, hold for the long term. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing dollar cost average in the dividend growth stocks and growing companies with positive cash flow that covers the dividend with a high return on their invested capital. I cover all my investment activity into the portfolio on this channel, any options that I'm in, any sells that I do, any reallocations of funds, any dividends that are paid out. I do not have a paid Patreon account or paid paywall to access or any other sites to go to that some other YouTubers use to charge you to see what they're doing. We all have enough to pay for, so it's free to see what I'm doing. But if you would like to help out the channel, if you could take a moment to hit that thumbs up button down below, hit the subscribe button, make sure you subscribe to the channel, join us on this journey to financial freedom, join the Vested Interest community, hit that notification bell so you're notified whenever we put out any new content. Doing that really does help out a small YouTube channel like me grow. It helps with the YouTube algorithm. Doesn't cost you a thing, and I really do appreciate it. Also, share with anyone you think that might find value in the content. If you know other dividend growth investors, that's what we cover on this channel, dividend growth investing. Go ahead and share with them. And drop a comment down below. Let me know what you're investing in. What did you buy this week? What dividends were you paid out? I know some people right now are selling positions. They're selling, taking profits, maybe even trimming some positions and taking profits and putting some cash on the side. Let me know if you're doing that as well and what positions those are, or if you had any options plays this week. Let me know what those are as well. Really do appreciate it. Thanks for all of you out there who have subscribed to the channel. You guys are awesome, and the channel continues to grow because of people like you. Now let's jump back into the video here. Now, first up, we typically cover options. Now, I was not in any options this week. My family went on vacation here last Saturday through Thursday, so I typically put out my options play over the weekend. I did not do that before I left. So no options. I didn't even put any out there and try to get any done this week. I just was not, I was busy planning for vacation and packing up, helping the wife get everything ready. We have two kids, so we spent some time down in Cancun, went to Tulum, had a good time with the kids and the wife. So I am back now, so hopefully we'll get into some options next week as we enter into April. Next up, we did receive dividends while I was away. On March 25th, we got our first payout from Schwab, the dividend ETF there, dividend equity ETF, ticker SCHD. They paid us $6.72, which picked up 0.08422 more shares. We do have the drip set on our portfolio, so anytime a position inside the portfolio pays out a dividend, in this case the 672, it goes back in and buys more shares of that same stock, or in this case ETF. And that 0.0842, that picked up another 25 cents in passive income over the next calendar year. Now this is a position I'm adding to weekly, so this passive income will add up pretty quickly here, and it will be significantly higher the next time it pays out. We received additional dividends on March 26th. We received dividends from Haverty Furniture Companies, ticker HVT, out of the consumer discretionary sector, paid us $30.86. And just like SCHD, these funds went right back in and picked up more shares of Haverty Furniture, 0.94062 shares to be exact. And those 0.94062 shares added an additional $1.09 in passive income over the next calendar year. And this is the dividend snowball in effect, right? We already own shares of Haverty Furniture Companies. Those shares pay out dividends. Those dividends go in, buy more shares. Those newly acquired shares add additional passive income. And that snowball keeps growing bigger and bigger and bigger. Even if we don't add any additional capital here, it will do its thing over time. Now it's just time working in our favor, right? And when you hear that dividend snowball, that's what they're talking about. And we weren't done. On the 27th, we received $149.41. And you'll see it's not shown here. I don't know why my bank was not showing exactly what was paid out. So I had to do the math here a little bit. It was right around $139 and some change. Vale paid us out, which picked up 11.451 more shares of Vale. And Vale is a mining company in the materials sector. This is a Brazilian company, so there are some tax implications with it being a foreign company here. And Vanguard Total Stock Market ETF, ticker VTI, also paid us about $10 and some change. That was our, just like SCHD, that was our first dividend payout from this ETF. And those funds went and picked up 0.0387 more shares. And these new shares that the dividends paid for added an additional $12.59 in passive income over the next calendar year. Finally, we get into the new capital that we invested this week, $1,450.16. We did all this actually in the airport in Atlanta when we were on the way back on Thursday. So it should say March 28th here. Sorry, the dates are not updated. But on March 28th, with this $1,450 and some change, we picked up 4 more shares of Medical Properties Trust, ticker MPW. This is a REIT out of the real estate sector. We picked up those shares at $4.71 per share. We added to Valet. Not only did they pay out dividends, but we've been adding a little bit here to Valet, this mining company out of the material sector, pretty much over the last several weeks at least. I love them back here in the $12 range. I'll probably keep adding throughout the next month. They are on my stocks to buy watch list for April. So if you haven't seen that video, go ahead and check that out on the channel. We picked up those 4 shares at $12.10 per share. American Waterworks, utility company, ticker AWK. This is one we've been building out, trying to get this to 100 shares before it really runs up. We picked up 5 more shares there. It's a utility company. We picked up those shares at $121.83. VTI, this is a weekly buy. We're going to buy Vanguard Total Stock Market ETF, ticker VTI, every week, regardless of what the market is. So we picked up 1 more share at $259.99. Comcast, the other one that we're trying to build out right now. So American Waterworks and Comcast, we're really focused on trying to get to 100 shares or more. Comcast, I might run over a little, maybe 120 to 140 shares on this one. American Waterworks, I'll probably stop right around 100, 102, 104, somewhere in there. Comcast Corp, ticker CMCSA, out of the communications sector. We picked up 10 more shares at $43.32. And our other weekly ETF, again, we're going to add 1 share, at least 1 share, every week, at least through 2024, probably, and beyond. And if this does happen to pull back below our cost basis, we will add a significant tranche. But right now, it's really starting to run up. It's into the 80s now. I think my cost basis is around $77. We'll see that here in a little bit. So we added 1 more Schwab ETF, Schwab Dividend Growth ETF here, ticker SCHD, and 1 share at $80.65. This $1,450.16 in new capital, all the shares it picked up added an additional $35.03. The $35.03 plus the funds from the dividends that were paid out added an additional $48.96 in additional passive income over the next calendar year. So next up, we'll take a look at the overall portfolio sector weights here. Communications sitting at 9.87% of the portfolio. Consumer discretionary sitting at 4.80. This one I will probably nibble a little bit on BABA now that I've got it to over 100 shares. So long as it stays down in the $72, $73 range, I don't mind adding a little bit more. Consumer staples sit at 11.38% of the portfolio. Energy makes up 6.28%. Enbridge and EPD, Enterprise Product Partners, are 2 that I'd like to add a little bit more to over here in the next couple of months. I'd like those to hopefully stay back down. Enbridge, I think, is still under my cost basis. Enterprise Product Partners has run up a little bit, but I wouldn't mind adding a little bit more there. Financial sitting at 6.75% of the portfolio. Healthcare, 15.79%. If you haven't seen the stocks I'm looking to buy for the month of April, there's a couple of healthcare stocks there. Go ahead and check out that video. You'll see what they are. Industrial sitting at 7.37% of the portfolio. Technology at 7.26%. Cisco in my portfolio, ticker CSCO, is one I'd like to add to right here. I think there's some value right there right now. Materials, as we saw, Valet, I'm looking to add here. And there's 11.5% of our portfolio in the material sector. Utilities makes up 5.60, so that's that American Waterworks that we're going to be adding to. REITs and real estate at 11.49, and ETFs, still the smallest slice of the overall pie at 1.92% of the portfolio. Now here it is, what you come for, a lot of you, every week, and I'm going to show this whether the market's up, whether the market's down, whether the market's floating sideways, and whether my portfolio is up or down. I'm going to show this every week. The idea behind this channel is to show you a real portfolio built out over time, week over week, the ups and the downs associated with it. The different positions inside the portfolio that I'm building out might be different than yours. We all have different time horizon, different investing strategies. So it's fine if you have different positions in your portfolio. You don't have to match mine. This is built out for me. I'm looking for more on the income side with some growth. I'm in my mid 40s, so I'm probably or most likely going to retire sooner than some of you that are watching the channel, and that's all right. Maybe some of you will forgo dividend yield for more growth. That's okay too. Set up your own criteria and then stick to your plan. But I want those of you out there who are getting started. I'm not a guru. I didn't go to college. My parents aren't rich. They don't even have portfolios. My dad doesn't even use the internet, to be honest with you, or even have an internet connection in his house, or a cable for that matter. So it's not like I have a background in this, or my family had a background or gave me a bunch of money to do this. This is something I'm learning on my own. So I want to share with you so you can see the mistakes I make and don't make the same mistakes, see what works. Maybe you can copy the stuff that works. And for those of you who have not started your own investing journey, hopefully seeing this, seeing someone like, you, a regular person who goes to work every day. I have 2 kids. I'm married. I have a mortgage and I don't have a car payment. My car's paid off, but I do have a mortgage and regular bills. My utility bills come every month. We pay for our groceries just like the average Joe. Now, my brother's name is Joe. So, but anyways, I want those of you out there who maybe have not started your own portfolio in investing to see that you can do it. It's not something that, is just for the wealthy out there. It is, in my opinion, the best way to financial freedom. And I like dividend growth investing because I believe this way you have a passive income coming in and you can live off the dividends at some point. Whenever you make enough in dividends where it pays your bills, you're done working. That's the idea behind this investing strategy. And hopefully it gives some of you out there the courage and seeing this type of portfolio built out over time that you can do it too. So I'll get off my soapbox there for a minute and we'll run through this real quick. So in this column, you're going to see the tickers. This is what we saw on the previous page was all the sector weights. This is all the different positions in the portfolio. How many shares I own of each. The current price as of the close of business on this week, Thursday. Usually it's on Friday, but this week there was no trading on Friday. The market value. So what the current market value, again, as of the close of business on Thursday. Average cost per share. This is my average cost per share. This is how much I have into each position. Total returns you'll see here. So if it's in red, that means I'm down. So I'm going to show you, right? You're not always going to be up. You're not every decision you make is going to be a home run, right? And it might take some time as you buy them out. They might pull back, which in my opinion is fine. It presents more of a buying opportunity. You're buying more passive income. Whenever I see red, I look at those as buying opportunities. Here's same thing, that just the percent instead of the numbers. Here's the percentage. Green means I'm up. Red means I'm down. What sector they fall to. Again, we saw on the previous page all the sectors. So this gives each individual position sector, whether they're a quarter, monthly, semi-annual payer. I will say in this sector there are a couple. I know it's labeled semi-annual, which should be once or twice a year, but there are some like BABA only pays once a year, so that should be annually. SBSW pays out at least twice a year, sometimes once, typically twice, sometimes 3 times. They do a special dividend on occasion. Same thing with Valet. They pay out typically twice a year, so that'd be semi-annual, but every now and again they do pay out 3, and sometimes if the market's really pulling back or metals are really down, they pay out once. So I know that says semi-annual, but it might be annual in the case of BABA, and it might be more than 2 in the case of SBSW or Valet if they pay out 3 times a year or 1 time a year. I can't control that, but if I add additional columns, it starts getting hard to read. Current yield as of the close of business on Friday. My yield on cost, the portfolio weighting. So on the previous slide, we saw each individual sector's weight. This gives you each individual weighting. And I want to talk about that for a little bit. I have a rule in my portfolio. I don't want any position to be over 20 or 25%. And that's not a hard and fast rule. If a position was to run up over 20% because the stock was on a run, I wouldn't necessarily cut it. I might let it go to 25%, but typically I want to keep it around 20% if I'm adding to the position actively with new cash. And same thing, I don't want any one position to be more than 10% of the portfolio. Johnson & Johnson being the closest at 7.55%. But same thing, let's say Johnson & Johnson all of a sudden ran up to $180, $190, and it went over 10% of the portfolio. I just would stop adding to that sector, right? Or especially that position. I wouldn't add any additional. I would forego adding anything until that was back down under the 10%. It's not necessarily mean I'm going to sell out of it. It might mean that if it really ran up and I thought it was overvalued, I might trim some of it and take some profits and put somewhere else. But it is not a rule that I have to sell. It just means I'm not going to add to that position if it's over 10% of the portfolio. Estimated annual income in this column, payout months here, dividend growth year over year in this column, and where it sits at 15% of its 52-week low. So let's talk about this for a moment. So let's use BABA. It's one that we recently have been adding to, or we could even use AWK. Let's use AWK. This one I'm still adding to right now. I've got 19 shares currently. My cost basis is at $119.06, right? I love to get positions and add to positions when they're under my cost basis. Obviously, it's no longer under my cost basis at $122.21, but I'm going to continue to add to this one, even though it's over my cost basis, and try to get this to 100 shares. But I've set a $131.38. That's where it's at 15% of 52-week low. That tells me this number here, my average cost per share, I don't want that to be over $131.38. So I'll continue to add this to this position, even though it's over my cost basis, so long as I'm under $131.38. Does that make sense? I hope that makes sense. If it doesn't make sense, drop a comment down below. I'll see if I can explain it in a different way. All right, so total shares, I currently have 6,207.723 shares. Market value has really run up here over the last several weeks, sitting at $231,082.66. I have $216,903.44 into the portfolio. Total return is $14,179.42. I'm up 6.54%. I am not focused on this. That's not my focus. The current yield is 4.34%. My yield on cost is 4.624%. And that's why I have it circled in red. This is what I'm focused on. The dividends paid out by all the positions in the portfolio, passive income, annual income provided by the portfolio that eventually I will live off of. And it just hit, if you notice, it just went over the 10,000 mark. So we are in the 5-figure club now, no longer in the 4-figure club. We've hit the 5-figure club, and eventually over time, we'll hit the 6-figure. And if enough time passes and we add enough to the portfolio, hopefully the 7-figure club. But for now, we're in the 5-figure club. New record, $10,029.38 in annual passive income, getting very close to $1,000 a month on average. Really looking forward to passing that here over the next couple of quarters. I think it will be by Q3 of this year, quarter 3, probably sometime around September maybe. We should pass, maybe before that, August. We may pass over the $12,000 mark, or $1,000 a month. And then the last column here, dividend growth is sitting at 5.72% year over year. So that just means the positions in the portfolio should grow as they increase their dividends, an average of 5.72%. Even if I don't add any additional capital, it should increase my payout by an average of 5.72%. And this changes over time, right? Sometimes companies increase their dividends more than their 1-year average. Sometimes they increase them less, right? That really is up to the companies in the portfolio. And we are looking at possibly trimming some of these, like, which one is that? Kraft Heinz, for example, that have not been growing their dividend over time. Now Kraft Heinz is back in the green. So, it may be one, again, I'm thinking of holding this for another year just to see if they do start increasing that dividend. But in 2025, Ally is another one that's recently cut its dividend back in the last year and a half. Whenever I bought it, it was increasing its dividend. Kraft Heinz, I bought it knowing they weren't increasing their dividend, so I'm going to give that one a little bit of time. I'll probably give Ally a little bit of time as well. But some of these that are in BABA, they just started paying a dividend this year, so I'm looking forward to them starting to increase it next year. I'm assuming they will. We'll see. But some of these positions, OHI, I'm fine with because it's an 8.47% yield. I don't mind if they don't increase their dividend. Such a high yielder. SBSW, this is one that might be on the chopping block if it doesn't start dividend growth again. AT&T, I knew going in whenever I bought it, they didn't have dividend growth. They had recently cut the dividend, so same thing, real high dividend yield at 6.31%. So long as they don't cut the dividend again, I'd be fine with holding this one for a little bit longer. Valet, UNP, Union Pacific, another one that's recently stopped dividend growth. I don't like that. So there's a few in here, Kraft Heinz, Union Pacific, excuse me, that if they do not continue, or Ally Bank as well, if they do not start growing their dividend again, we might seriously considering in 2025 cutting some of these positions out of the portfolio and rolling these funds into other companies that are growing their dividend. I want growing dividends over time. That's what the dividend growth, that's what the growth part of the portfolio is about. All right, well, let me know, what is your dividend income from your portfolio? Love to hear from you. Really, let's wrap this one up. Getting long-winded. Hope you all have a very happy Easter. I should have said that in the beginning. Happy Easter. This one's coming out Easter morning. So hope you have a great day. Hope you had a great weekend. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do a stock pick of the day series Monday through Friday if the market's open. If the market's closed on a day, I don't do a stock that's pulled back, because obviously there's no stocks that pull back. So if you have a company you'd like me to cover in the stock pick of the day series, go ahead and drop it down below, or just let me know whatever else you want. You got any questions? Drop them in the comment section. Let me know what you bought this week, what dividends you were paid out, any options that you were in this week. Love to hear from you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Again, happy Easter, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk and can lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and stock criteria, or seek the advice of counsel of a certified financial advisor.